Yo, what up YouTube? Welcome to another video. I'm going to be breaking down a couple of trades I took this week where I made over $8,500 in the span of 2 days. Hopefully these breakdowns will help you as well. And if you watched the last video about dealing ranges, I talked about gold and what is required to go into buy side of the curve. This is what we're going to break down exactly in this video and how I caught over 600 pips on gold itself. Also, I appreciate all of your kind comments in the previous video. It would help me out a lot if you hit that like button and subscribe, of course, for future content. And let's get into these breakdowns. Okay guys, we'll start off with gold and then we're gonna go to EURUSD. And I'm gonna give you a little tip on breakaway gaps as well, because I actually entered a trade and then there was a gap that stayed open, but I knew it would stay open. I'm gonna explain it in a bit. But first, let's go to gold, right? This is the buys I took from the IFEG, the inverse fair value gap on the 1 hour time frame. Called out before, of course. I will put it on the screen right now so you can see no hindsight. But let's break this down. How did I come to the conclusion that I want to buy here? Let's first of all go to the daily time frame, because I recorded the video about dealing ranges before market open. I dropped it yesterday, I think. But yeah, price was looking like this, right? And I explained how this was confirmed sell side of the curve and what is required. That was your homework. What requires to happen first before we go into buy side of the curve here. Now we had a higher time frame key level. We have SMT on the lows. And that for me is enough to at least form a run higher at the start of the week. Now think about the 4 hour structure, right? The two dealing range technique, right? We had one over here. That's the first one. What happened afterwards is that a second range happened, right? It did not take out the high of the first range, but it is not required because we build up an entire big buy side liquidity pool over here, right? So what you want to do is you want to wait for price to run back into an old low. And now you're probably wondering, but we didn't hit discount over here. We did on silver. So that's SMT. And we're using this as a key level over here. So what you see over here is a run on liquidity. And the neat part here is as well that Asia session took out a low. Why are we not manipulating below New York midnight opening price? Well, that's because Asia session already took out liquidity. So that's how you can determine that sometimes price does not manipulate below opening price. The next thing you need to do, if you use the time frame alignment model, you would actually buy the low, right? And then you have a wider stop loss. But you could also use this another variation, which is wait for a CSD OB or an inverse fair value gap to form, which happened over here, right? So I executed on this low over here when it tapped into the IFEG, and then price busted up a lot, and I closed around 600 pips, and then it ran another 400. So it went up at 1,000 pips over here. It was an incredible monster trade. It was the biggest trade I had this week. It was over half my profits for the week as well. So it was like a 4.5K or a 4.6K trade. And yeah, the read was just very good. So let's go to EURUSD. But let's break down a buy I took, which was out of kill zone times, and it was sort of looked like a breakout trade. I'm going to put a P&L indicator where I got in, which was around here. And I had my stop loss down here. And then I aimed for around 2R. It's always good to do a fixed risk to reward, in my opinion, especially if you trade funded accounts, because you don't have to hit a target, right? And 2R is plenty for a good trade setup. Now, why would I enter here? And how did the gap on the 1 hour time frame stay open, right? So if we go to the 1 hour, then we have this fair value gap below, which stayed open. And I knew this. I can show a screenshot which I sent to my buddy, and that this gap stays open most likely based on the next candle that is over here, right? So this was around 1 p.m. EST. Once this candle closed and then the next candle closed above it, I was confident that this entry I could just go to bed and hold it overnight. But the candle over here, this is a candle, and you can watch that back in your charts as well. These types of candles create breakaway gaps. Now that is because first and foremost it's a down close candle, so it will act as a support level if price starts to close above it, right? And price started to close above it over here and then started to consolidate. So it's very unlikely that price comes back into this fair value gap over here, because we already formed this down close candle here and then price closed above it. Now, how did I know that Asia session would expand? because we're in a box over here, right? So it's very likely that when price closes around the daily rollover, that Asia session is going to be an expansion. So you can write that down in your notes. I've seen that happen plenty of times. I want to go over USDJPY as well, because that's one I shorted, but I closed early. I was looking for shorts early in the day, but it did not develop. I wanted to short it during New York session, but it wasn't kind of forming. And then around 11 a.m. or 12 p.m., I went into the lower time frame, and then I shorted above this high here, or around this area over here. And my emotions got in the way, I think, and I just closed it early. I had my stop loss on this high, and because I already made a lot of profits, I was like, nah, let me not waste profits here, and let me just close it. And then afterwards, it actually dropped like 150 pips or something. So that could have added a lot more to the balance this week. Maybe I could have ended up with 5 figures in two days, but I'm not gonna greed anyway. But this is also a sort of a time frame alignment model, right? We have the range here, then price wicks above these highs, displaces down lower again, and now you can make a smaller range here and then short the smaller range. So if you do the smaller range over here, then you have equilibrium here, and there is some buy side liquidity resting, right? So if you're in bearish order flow, you want to soup these highs, and then you want to continue down lower. So these are some of the trade setups. I hope you like this breakdown. If you want more of these videos, obviously I will upload more. Make sure to subscribe so you don't miss out on any notifications. And thank you for joining. I will see you in the next one.